What's up, ladies and gentlemen? Welcome. It is Monday, and we are going to talk about some really crazy stuff in this video. I'm actually going to be sort of responding to a video that I actually watched this morning that I think is going to be eye-opening for you, and I think that it is something that is much more likely to happen than you may think, and I'm going to explain why, which is not discussed in this video, which is why I'm going to be kind of interjecting things as we move through. It's a 14-minute video, but we're going to go through about 13 minutes of it, and so this overall video may be 20-25 minutes, okay? So if you like really quick, you know, oh, I just want to watch something really quick and not really have to think very much, maybe this video is not for you. If you want to really learn something that's going to probably prepare you in some significant ways over that. I'm not kidding either. This isn't clickbait. This is going to be a really big deal, and I want you to open your eyes to what I actually believe is happening, because at first glance you're going to think there's no way. There's no way. And there's some other videos that I've seen, and this is about abolishing the IRS. And I'm going to explain to you why I think this is actually much more likely than you might think. Okay, so I'm going to pull this video up. This is Zeke. I think that's how you pronounce his name. I've been watching some of his videos over the last few months, and you know, he's a pretty sizable YouTuber. He's got 2.19 million subscribers. Very well done, very edited video. So if you like what I show you, obviously you probably, I have a tiny fraction of his subscribers, so I'm not going to help him very much, but I will thank him for providing the content that's going to help me right now, because it's ultimately going to help me educate you guys in a way that I don't see mentioned in a lot of this stuff. So we're going to go ahead and get started, and here we go.
Battle in Congress, and the Republican Party is fighting to defund the IRS and to completely get rid of it. This is a crazy story, so here's what's going on. You might remember the Inflation Reduction Act of 2022, which spent roughly $500 billion on tax breaks to increase clean energy and to lower healthcare costs. But as part of that bill, they also wanted to give the Internal Revenue Service, the IRS, $80 billion over the next 10 years, which was an increase of 600% of their normal budget, which was estimated to fund 87,000 new IRS.
So right off the bat, so he's talking about this whole thing that the Democrats pushed to basically bring in 87,000 new IRS agents. And at first glance, we're thinking, oh my gosh, they're basically bringing in all these people and all this money to start going after the poor, the middle class, and you know, everybody's thinking, oh my gosh, we're done. It's going to be audit hell. Everyone's going, you know, down, that kind of thing. And the thing of it is I actually talked to an IRS agent, and you know, he was like, dude, we're still on fax machines here. Like, they are so underfunded, and I'm not trying to sympathize, because I do believe that there's a lot about the tax code that is nonsensical. I mean, you know, there are millions of arguments that can be made about whether or not the way income taxation occurs in the United States is even legit, okay, in the eyes of many. That's not my job to say. My job is to just basically pay what they tell me to pay and move on with my life as best I can. And it is what it is. However, this whole thing really started after they had changed some bills or added some laws, basically saying, listen, if you make more than $600 a year using any kind of third-party payment app, well, now you have to claim it. So if you're mowing lawns twice or three times a week, chances are you're gonna have to start paying taxes on that income. And there's so much more to so much of this that we're going to touch on, but I don't want to break it out yet.
Agents. So imagine 87,000 of these guys running around to audit you and to go after your income. Obviously that upset a lot of people, which is why right now there's a battle in Congress, and the House Republicans are voting on something called the Fair Tax Act, which wants to defund the IRS and to rethink how we pay our taxes completely. Now you might be thinking,
Andre, this is just a clickbait video. Another YouTuber just grifting. Nah. See, we both know that Democrats would never pass it, and even if they did, the president would vote to reject it.
And this is true. Sometimes I think that's what the comment section sounds sounds like, but that is not why this is happening. So in today's video, I want to explain exactly why this is happening, and then I want to show you exactly what this new way of paying taxes might be in the future and how this will affect us. So with that said, let's get into it. Hi, my name is Andre Zeke. Hope you're doing well.
Andre Zeke. Sorry. You know how terrible I am with last names. This video is so good, though.
For the finance and stay for one of the most unanimously disliked things about being an American, paying your taxes. Now, the United States Federal Income Tax Code was created in 1913 after the approval of the 16th Amendment to the Constitution, or about 1 year after the sinking of the Titanic. Now, believe it or not, the original tax rate was 1% for incomes above $3,000 a year or more, which in today's dollars is about $80K a year. Now, it was also capped at only 6% for people making $500,000 a year or more.
So keep in mind, this is basically a 1 to 6% tax, income tax across the board, depending on how much you make. And that was the beginning of the tax code. And that has changed so much over the years, obviously, as we now know. And so much of that has been in favor of those with, let's be real about it. I pay my accountant very, very well to make sure that all my T's are crossed, my I's are dotted. I pay what I'm supposed to pay and no more. And it's expensive to do that, because the more you have going on, the more you have to go through. Like every tax season, I basically have to give him everything, everything, files after files after files, exports, printouts, all kinds of crap to sort through, and it's expensive because it's extremely time consuming. And the more businesses you have, the more LLCs, the more, if you've got an S corp, and it's all chaotic. But early on, it was very simple. If you made this much, you're going to pay just a flat tax. You make this much, and so but gone are those days.
Surprising thing is, who is making $500K a year in 1913 though? Probably someone that looks like that though. Someone who looks like they could afford a very rare diamond. The Cour de la Cuts and Jobs Act of 2017, which created new tax credits and new deductions. But all in all, it just made things a lot more complicated. Now, long story short, today we pay taxes based on how much money we make. But what's interesting is that we have different tax structures based on all the different kinds of ways that people can make money. That's why, for example, there's something called property taxes, which are taxes we pay based on the property we own. There's also something called capital gains taxes, which is the preferred way for the wealthy to make money. Because when you sell an investment, that tax that you have to pay is taxed at a preferable lower rate than income taxes are. And that's why the middle class says that the wealthy don't pay their fair share. In reality, the wealthy pay more in terms of the dollar amount, but they do pay less in terms of the percent as it relates to how much money they make. And that's why the middle class feels disproportionately affected, and it feels like savers are being punished. And that's also why there's a conversation.
Savers are also ultimately being punished as the inflation rates rise, because the longer you're saving money that you're not generating a return on, the inflation kills any potential return, especially now with banks basically paying nothing. Effectively, I don't even know what the rate of return is with a savings account now, but I think it's a fraction of a percent at best. So yeah, if your money is not working for you, inflation is killing any profitability of any kind of savings. So yeah, this is accurate to I have money sitting in a bank account. It's doing me nothing. And ultimately, at the rate things are going, it's just losing value, which means if I don't put it to work soon in something, I'm just losing value over time. So it just does not make sense anymore, as things are today, to put money away for a rainy day, saving it in a coffee can, because it's just not going to benefit me as much a year from now as it does now.
In Congress, that we should change the tax code to be less focused on income and more focused on something called consumption. And speaking of consumption,
okay, so he'll break this down for a while, but ultimately what's being presented is abolishing the IRS altogether, right? And a lot of people are thinking, oh my gosh, that means no taxes. No, that's not what it means. What it means is a change in the tax system completely, going from a It's not about how much you earn. It's not about the number of LLCs. It's not about spending, 2 months sorting through every document, every transaction, breaking down business expenses to personal expenses, and just the mad rush associated with getting things done, getting them done properly, and then getting them done properly on time before a specific deadline. That is the challenge. Well, if we eliminate that, we move to a system whereby it's based off of what you consume. So ultimately, I'm not paying income tax per se anymore. I'm not filing a tax return anymore. There's no need, because the tax I'm paying is based more off of if I buy a house, if I buy a jet. It might say, well, like he gives an example in this video. If I buy a jet that's $50 million, well, the consumable tax on that might be a certain percentage rate based off of the value of what I'm purchasing. So instead of $50 million, maybe I'm spending $65 million on the same jet. There was a lot of that. Well, it's a very different system, but in Puerto Rico, it was very similar in terms of paying import taxes on everything. So, a $70,000 SUV could very easily be, $85,000 because of the import taxes and all of the other taxes thrown on that purchase. But the thing of it is if it's a luxury item, maybe it's taxed at a higher rate because people with more capital, more money, and who, obviously live a much better life can afford to pay that higher luxury tax on things that they don't necessarily need. But necessities like food, clothing, things like that within, certain cost limitations and so forth. And believe me, there's a big point coming to all of this and how I believe this will all work. And I think you're probably already ahead of me mentally, because you've probably been following me for a while. But ultimately, it's based off of what you spend, not necessarily what you make. And so that's a pretty big deal. So we're going to skip ahead a little bit because I don't want to if you want to watch his whole video, go watch his whole video. I will link it in the description below because he does a great job with a lot of this kind of content. But ultimately, he's going over some of the tax differences.
Be able to raise more money from taxes and therefore help lower the national debt, which has gotten out of control. Now, as good as the national consumption tax sounds, it's not perfect and there are some downsides. The first drawback is that consumption taxes can sometimes become what's called regressive. This means it disproportionately affects the lower income people. That means that a larger portion of their income would be spent towards their necessities. Now, this is actually a drawback in comparison to our current system, because in our current system, if you don't make enough money, you don't have to pay any taxes. But this new system would force those people to pay taxes when they otherwise might not be able to afford it. The second drawback of national consumption taxes is that wealthier people might end up paying the exact same amount in taxes as the lower income people. Think about it. If you're making $500,000 a year and you're spending money on the exact same necessities as someone making $50,000 a year, in theory, you'd be paying the exact same amount in taxes. Drawback number 3, it would create compliance costs for businesses. This means businesses would have to hire new employees and create new departments to communicate with the government to take the money in and to pay them, and that's just a new system that would have to be created, but hey, I'd rather be their problem than my problem, if you know what I mean. Drawback number 4 is that the cost of used items would go up significantly. Think about it. If buying new means that we have to pay 25 to 30% more for them, most people would rather go to the used market to buy that item used and then save the 30%. But that also means the difference for the cost of new and used would close significantly, and that's just the reality of it.
Okay, so these are big key points. And now I'm going to start painting a picture for you, because things will start making more sense. So he had pointed out some drawbacks, right? Some of those drawbacks are, well, what would stop somebody, maybe a billionaire, from just moving outside of the U.S.? Maybe they make their money in the U.S., so they're not taxed anymore on that income tax, but they buy all of their assets outside of the country in a place that doesn't have that sort of tax code. Oh, well, now we've just created a whole new problem because we're eliminating even any taxation at all, right? In the current state, if that were to be the way things are right now, not using blockchain, not utilizing some of the things that I believe are coming down the pipe with, agendas such as the Great Reset. Okay, now I'm going to get into that a little bit deeper. Another thing that he had pointed out is used items, used products would be in much more demand. Well, what would that also mean? Well, that would also mean less waste, basically more of a green centric effort. Okay, because if people are buying used more than they're buying new to save costs on those new taxes, then ultimately what that does is it brings consumption down. What happens when consumption goes down? Well, inflation generally also comes down, which is one of the biggest efforts that the Fed is trying to make right now to reduce inflation and keep our dollar steady and all that fun stuff, right? So those are just two things that right off the bat, this kind of thing would solve. What we know is that taxation doesn't seem to really help much anyway. The current state of affairs, if they're printing trillions and trillions of dollars every couple of years, or however often they want to print $1 trillion for this or $1 trillion for that, why are we taxed? If they can just print money out of thin air to spend it on whatever they want, and they're ultimately reducing the value of the dollar every time they do that, why do they need our tax dollars? What does that do? Well, in essence, it offsets some of that spending, but all it really is doing is slowing the progression of the deficit. But at this point, what does it even matter? That's my question. I'm not an economist. I'm sure there are reasons for it, but ultimately, if it were such a big deal, why would they take assets? Why would they do all of the things that they do to enforce a tax policy that isn't even necessarily necessary when they can just print all the money they need to do whatever they want? But anyway, the point to this is this would ultimately solve a lot of these problems. And anywhere I look, if I see the Great Reset or the World Economic Forum, or I see any of these groups, it's all about like this ESG compliant, this social credit, all of these things that ultimately are to lower carbon emissions, protect the planet, protect the earth, protect climate change. Well, this sort of taxation model would ultimately help with a lot of that in a number of ways. So we're going to keep going a little bit because there's some bigger points that I want to make too.
And drawback number 5, your Roth IRA could be taxed twice. It is money you already paid taxes on, and when you invest it and it grows into whatever it does in retirement and you withdraw it, you will use that money to buy things with, which will be taxed again. So those are some of the pros and cons of the national consumption tax, but long story short, the Fair Tax Act just votes to reduce the funding for the IRS, to get rid of it, and to create this new tax system. Now here's the question. If we already know that the Democrats in the Senate are going to vote against it, and the president would vote to repeal it, then why on earth is this political theater going on? Here's what I think. Please remember, this is just my theory and my thinking about this, but I think the national consumption tax is an extremely popular idea among the general population. Ask someone random on the street right now, would you like to lower your taxes and never pay them at all? Of course I would. Would you like to never file your taxes with the IRS because they no longer exist? Of course I would. Would you like to never receive a letter from the IRS and ever get a heart attack? Of course I would. Would you like to extend your car's warranty insurance? No. Get out of my face with that. But you get the idea. Everyone would get behind those ideas. I support the national consumption tax if it was implemented in a way that was responsible, thought out, and well researched. But here's the thing. Even though the national consumption tax is extremely easy to understand as compared to our broken and complicated tax code today, it is still extremely hard to put it in a way that doesn't affect people like retirees and the lower income families. In fact, there are so many things that we don't know about in terms of how it would affect the economy.
Okay, so I'm going to paint a case here. He made a lot of claims about the pros and cons of this sort of new taxation system. And given the current state of our economy, the way we handle finance and transactions and tracking things, this would be a buggy system. And it would require new compliance people at different businesses to make sure that they're doing things properly, so forth and so on. But what would change all that? What kind of system would ultimately change the need for a lot of the pain points that he's pointed out in this kind of consumable tax system? Blockchain and AI. Those are the two main things. If Aladdin, a computer system, AI platform, can handle the market planning, fluctuations, trading, all sorts of things for a multi-trillion-dollar entity in BlackRock and any other companies that they sell these services to, why wouldn't and couldn't an AI system also monitor and manage the inflow and outflow of taxation. Actually, there would only be one way. It would be a one-way street. Finances, you buy something, you're buying it utilizing a blockchain or a CBDC or whatever the government stable coin, stable token, whatever. All these transactions are happening on the blockchain. So it's all tracked. We're all going to end up having our own ID number that's going to be related to a wallet, a centralized wallet system that's all tracked and monitored somewhere, someplace, right? We're no longer going to have IRS agents. We're going to have people that are monitoring the blockchain. We're going to have people that are monitoring transactions. We're going to have people that are ultimately slowly teaching this AI on new things to look for in various transactions, ways to, when I was doing my Bitcoin ATMs and I was trying to do that, I had a compliance officer that I paid whose whole job was to make sure everything I did was on the up and up, which thank God it was, because they did look. But outside of that, to make sure that they were going through all of the transactions that were happening on my machines and flagging anything that looked suspicious in any way. So ultimately, he wasn't programming an AI, but he was basically saying, this doesn't look right, this doesn't look right, this might want to be investigated or looked into further or whatever. But ultimately, with an AI-driven system, instead of these IRS agents sending us letters saying, hey, we think something might be a little off, we need to take a look, they're going to be looking at the system and likely flagging things that they think look suspicious or don't make much sense or need to be reviewed further, and then they will do it that way, all the while programming the AI in things to look for on its own, right? This is the future, in my opinion. This is absolutely the future. And when you talk about, well, what about senior citizens that are basically, they've already paid all their taxes throughout their life? Well, they would be in a completely separate system, a completely separate category or class of person based off of their age or whatever, that kind of, whatever it is. You know, somebody who's 16 years old getting their first job, maybe they have a little bit of leeway to help themselves grow and save up some money or pay college debt or whatever the case may be. Senior citizens may get senior benefits in terms of their taxation. Maybe they're given a certain amount of credit every year for items that maybe, you know, that won't get taxed as much. There's a whole way and a whole new system for doing something like this, but it makes the most sense of anything else I've seen. Anyone that thinks that the IRS as a whole is just going to be abolished and we're not going to have taxation, that's never happening. What are the two things that are the most, the things you can always count on? Death and taxes, right? It's the system by which it all happens. Now, somebody that lives in the US and maybe they buy their jet outside of the US. How do you monitor that? Well, if we're talking about a global economic change, right? We're talking about this great reset. We know that a lot of these countries are all kind of working together under a similar agenda. You can call it whatever you want. But all of these companies are very likely going to be sharing information on a global level, working with whether it's the taxation systems or the trade or the economic systems, whatever. I believe we're all going to be a part of a much, oh no. Oh, okay. Yeah, I thought I lost my audio. Hopefully, I'm going to have to check this video now. But all of these countries are going to be part of a much bigger system. I'm going to consider it like a hive, a global hive mind, I guess you could say. And I don't mean that in a political way. I just mean that in terms of economics. When all of us are ultimately handling our affairs on the blockchain, which I'm sure we will, a centralized, fully trackable, fully monitorable blockchain, and every transaction we make is going to be reviewed on the fly in real time, very much likely by some sort of AI-driven system. This is the kind of system we're going to get into. That's what I wholeheartedly believe is coming. And I don't think that's necessarily a bad thing. And honestly, if they want us to adopt a centralized digital token that they can track everything, this kind of system would be one of the methods that I believe would bring the most people in and say, okay, track everything. I don't want to have to deal with taxes anymore. If I can afford a Bentley, I'm okay with paying a much higher luxury tax on that Bentley than I am going through paying all this money to accountants and people to make sure that all this other stuff is figured out and done properly. So, I mean, I honestly, and you know, to some degree, It might even be more expensive to some degree for some of us, but it's at least fair, in my opinion. It's more fair, and if it's the same across the board for everybody, and it's like, okay, you know what? You want to go buy a Ferrari, you want to go buy a jet, or you want to go buy some Louis clothes or whatever, and you're going to pay a higher tax rate on that. Hey, at least you have the choice in terms of how much you want to pay in taxes. Let's face it, wealthy people, they don't care. They just don't care. They can afford to pay those taxes, and if they want something, they're going to get it, especially if they can afford it. So that's not going to stop them. It's not going to slow them down. But it will do is make sure that everybody is paying tax regardless of their income or their status, and it's going to be based off of what they do, what they spend their money on. And I've always thought that was a much better system. So we're almost done here, and I'm going to get to some final points.
That neither party has ever been brave enough to actually do it. And for evidence of this, just go back throughout history and remember all the times that both parties had a chance to do it when they all controlled the Senate, the House, and the presidency, and somehow it never was. My guess is because it's a lot more complicated to restructure everything without having a ripple effect on literally everything else. Like, here's one of the questions I had. How would it work if someone lived outside the US but they were earning a US income? Obviously, other countries of the world don't have the same tax code, but what if those US citizens were consuming somewhere else? Does that mean they don't have to pay any taxes at all? So then, what incentive would billionaires and multi-millionaires have to stay in the US? Wouldn't they just want to move to Switzerland?
I again, if it's all happening on a blockchain, it doesn't matter where you're at. It doesn't. The blockchain is going to introduce a much more of a centralized, yet global nature to the economy. In other words, it's not going to be about U.S. dollar, this and the yen and the Deutschmark and this and that. It's not going to be as much about that. These individual country currencies. It's going to be about these digital currencies that are used on a global level, easily trackable, and it's not going to be interchangeable. I think the way, like the Forex markets, you're basically playing one fiat against another and so forth and so on. I don't think we're going to have that in the future. I think we're going to be trading tokenized traditional stocks and things like that on the blockchain. I think we're going to be doing a lot of the same things, but we're going to be doing it in 24/7 markets that are always buzzing, and everything is just going to be bigger, faster, better. That's ultimately what I really do believe. And I don't think that where you live compared to where you're doing your spending is going to matter anything, because I think it's going to be dependent on where were you issued your ID? Where were you issued your centralized blockchain number or wallet address, if you will, that is ultimately going to be a part of every transaction you make, because without it, you're not going to be able to buy anything. And you can let the conspiracy theories go ad nauseum about what these numbers are, is that a mark and all this other stuff. This has been, this whole mark, and you know what I'm talking about. This whole thing has been, I can't even count the number of times that the next new thing was the next big mark. Maybe there's a whole bunch of marks and together they all come, who knows? I don't know. But anyway, that's not even the point. What happens to retail and tourism?
Money for those taxes, or do they not have to pay them because they're not U.S. citizens? There are just so many complicated questions, and those are just a couple off the top of my head. So my thinking is this national consumption tax idea will be an extremely powerful tool as a narrative to get people excited and get people elected for any party that decides to use it.
So, this at this point, he's right. He's right to a big extent. But I also believe maybe it's just me being excited about something like this, but ultimately, I think it's going to come. I think that something like this will, in fact, play out. And I think that this is going to be a big change. Probably not by 2025, but by 2030, when the regulation in crypto has set in, when, it's no longer so much a gray area as to what is this a commodity? Is this the security? And what is this and what is that? I think when the law books and the rule books are laid out for everyone, I think they're also going to be more widely adopted on a global level. And then in comes these new taxation type systems that will utilize these technologies in ways that we have not thought of, we have not seen before. And I think, yeah, again, it's going to be a whole new reset for something that is going to change the way the world does business. Will there be ways that some people try to figure out how to skirt the system? I think there will always be that effort, but I also believe that through blockchain and through, the technology as it is, I don't think it's going to be very easy for people to do. I also believe that if we are really doing things and making significant moves in favor of like this ESG compliance type model, this whole kind of global climate initiative, something like this would benefit that. I mean, let's be real, because it would ultimately lower the manufacturing of having to constantly create new for this generation of consumption that continues to just get worse and worse. Every generation, it's more about instant gratification, and I got to buy this to look cool, and I got to buy this for my Instagram. I got to have this purse and this shirt, these clothes and these shoes. And it's this idea that we're constantly having to consume in order to be relevant. And I think that some of that will go to the wayside, and so, yeah, that's I don't know. Hopefully we're 30 minutes in and I ramble a little bit on this because there's so much to be said about it and I'm not even done. But I think you get the idea. I don't think that this whole abolish the IRS and get rid of I don't think this is a clickbaity thing. I think this is a real thing. I think it's being put out there for conversation. And this is my contribution to that conversation. I think that this is actually going to happen at some point, maybe not sooner than later. And it'll be dibbled around and it'll be hit back and forth like a ping pong. As the technology continues to develop to establish these underlying layers that are going to empower this technology and enable us to make such a drastic change in our taxation systems in the US and the world over. But mark my words, like I've said years ago, when I talked about the tokenization of traditional stock markets, and now we've got Larry Fink with BlackRock saying exactly that. We're going to be tokenizing the traditional stock markets. I also believe that we're going to end up in some sort of taxation system just like this, and it's going to be based off of what we consume and not what we earn, because earning is going to be a significantly different thing altogether in the very near future as well. And we've seen those cards start to play out already, which is an entirely different video. But until next time, thanks for joining me. Enjoy your week. It is Monday. I'm going to get back to work and I'll see you soon. Crow your coins.